had your leaders need to pay attention to it? Take us away. Okay. Excellent. Excellent. Great. So first off, let's see how our global reach is doing today. Let us know in the chat where you're joining us from, what part of the country or even the world. Let us know where you're joining us. Maryland. Hey, Kim. Welcome. Mike from Arizona. Welcome, welcome. Carlos from South Carolina. Terpland. Hello from Houston. Go Cougars. All right. Thomas from Atlanta. Awesome. We've got some Hangtown, California. Very nice. Brad from Oregon. Excellent. Here's another question for you guys. On a scale of 1 to let's ride this trend, how did your trading go today? If anyone caught some action in the markets, let's see who caught any waves or just got caught in the chop. Let me know in the chat, guys. Audrey, no trades. Okay, hey, sometimes the best trade is no trade, right, Jeff? Zora, second trade, 9 points. Awesome. Kim made money. I love to hear it. Jeffrey Apple. That was my next question, Jeff. It was actually, lastly, what stocks, ETFs, or underlying assets had your focus here today? Let me know in the chat. Wanda, GME put for 40%. Love to see it. Love to see it. Mike, a little silver action. Love it. Let's see what's on your radars, guys. Kim, gold and silver, they've been movers, no doubt. No doubt. The E-minis, I love it. Okay. Well, hello, everyone. Welcome to Beyond the Close. Thank you so much for being here today. Good afternoon, everyone. This is Beyond the Close, your real-time, no-fluff breakdown of the markets that matter. My name's Mo Chagini, your co-host for today, and I am fired up to be joined by our very own options coach, Jeff Lake, who's here to help sharpen your edge and prepare for tomorrow's trading session. Now, this isn't going to be your average recap, folks. We're going beyond the headlines, okay? Today, not only are we going to be covering the PCE report. What's PCE again? And what key catalysts and opportunities you may want to keep your eyes on before the bell rings tomorrow morning, and how we've been playing the markets as well with some of our expiring positions here going into tomorrow, end of week. Yep, you guessed it. Tomorrow is Expiration Friday. Thanks, Zora. Good to see you as well in here as always. The goal of this training, guys, is to give you a whole package of insights to increase your consistency and market awareness as a trader, and potentially help you generate a little bit more money trading here in 2025. So if you guys don't mind, let me know in the chat who's ready to rock and roll. Go ahead and let me know. Give me a response, a pulse. Me, yup, lots of readies. Let's go. I love it. All right, let's get started. So real quick, here's our disclaimer. Our legal team makes us show this here at Prosper. Past performance, as I'm sure you guys know, is not indicative of future results, right? And all that good stuff. So I'll leave it on the screen here for just a few seconds. You can visit our website as well, see it a little bit more in detail. But enough from me, guys. Now that the chat's warmed up, everyone's got the March Madness ready to rock and roll here, and the legalese out the way, right? Let's get to the good stuff. Jeff, I'm going to throw it to you, my friend. What's the real story behind PCE? What's the real story? What's it stand for? And really, why do we as traders need to pay attention to it?
Well,
take us away.
Hey, Mo, thank you. Thank you for the warm introduction. Hope everybody's doing well. Like Mo said, I'm one of the coaches, Jeff Lake. I spend most of my time in the options volatility and options essentials room with yours truly, our favorite guy, Scott Bauer. I'm sure He needs no introduction, but me, not so much. So I am one of the coaches in those two rooms. I am always monitoring what's going on. Want to make sure that everybody can hear me. I'm sure you can all see me, that's for sure. How is the sound? Sounds good. Thanks, Kim. You know, this is a new format for me, for your guy here after hours. Usually I am in the foundation room. So there's a lot of technology. They usually don't trust me with the technology controls around here. So got to make sure everything's working okay before I talk about this funny thing that I'm just reading about for the first time, the PCE report. No, just kidding, of course. Just kidding, of course. But sounds good. Video's okay. This is recorded for those of you that are interested. Okay. So let's just kind of march right into this PCE. Yeah, pretty much our American. Robert, you lost a bet, by the way, because I don't have Gucci on or Victoria's Secret. Okay, I think it was, or and you said Ralph Lauren. None of the three. So you owe tons of dough. Another lost bet. Okay, and I do take Zelle, in case you're interested. Beyond the close. That's right. There is a guy beyond the close. Yes, I am the resident haberdasher for Prosper. They all call me for the latest in fashion. That's for sure. You should see that group. Anyways, tomorrow morning, 8:30 a.m. Eastern time, the Bureau of Economic Analysis puts out this kind of important little data portion of the economy. It's called the Personal Income and Outlays Report. Okay, and it's for February of 2025. And within the body of this report, again, it's the Personal Income and Outlays Report. And within the body of that report lies the Personal Consumptions Expenditures Index, commonly known, for those that are interested, is PCE. Okay, pretty self-explanatory. Personal Consumptions Expenditures, acronym PCE. And it's nothing more than just a pricing index, if you will. Okay. Now, again, the breakdown of the report, inside the report, what they do is they release the Personal Income and Outlays Report, like I had said, and what it provides is a data on personal income, including spending on goods and services. Okay, so are we spending money, or are we sticking it underneath the mattress like some other people I know around here? Okay, so that's one of the things it puts out. Another measure is consumer spending is the key indicator of inflation for the Federal Reserve. So they kind of use this metric as an indicator of what the inflation looks like. I think, as we know, inflation is kind of just a fancy word for money chasing product. Okay, more money chasing product takes inflation up. Okay, it's kind of a simple component there, but they kind of complicate it and dilute it with some fancy language. But usually it's just too much money chasing too few goods. Okay, that's all inflation is. Okay, then but also is an important little metric here is it's the core PCE index. Okay, so what that takes out, and don't ask me why, because we all use this, okay, it excludes food and energy. Okay, it excludes food and energy. So it does not include food or energy for whatever reason. Like most of us eat, and most of us use some type of energy, whether it's gas, electric, whatever it may be, but it's not in that metric. Okay. Now, what they do is they kind of compare it month over month, let's call it. So previously, and this was for January of 2025, the PCE index increased about 0.3%. Okay. And that was about 2.5% from the same month 1 year ago. Okay. So it's year over year, month to month. Okay. But most importantly, it excludes food and energy. Okay, so excluding food and energy, the PCE index increased 0.3%. Okay, and 2.6% from 1 year ago. So there's been an increase. Okay. And again, that data comes out tomorrow morning, 8:30 Eastern time, 7:30 Central time, 6:30, 5:30 for the West Coast. Okay. Any questions on that? Yeah, pretty much, Rick. I would imagine they try and tame the number by taking out food and energy. So you can kind of tweak it to the upside, even, because you got, obviously, we all eat and we all use energy. There you go. Okay, so if there's not any questions on that, again, that is tomorrow morning at 8:30 Eastern time. And I do see a question here. Sorry for the delay there. If it goes down, that is helpful. Yes, that means inflation's kind of coming in a little bit. So a little bit of a more tepid number, better for the marketplace. You can see the results pretty much on any news network, I would imagine. CNBC always has, I think Rick Santelli is always on top of that number right at 7:30. So I know CNBC's got it. Bloomberg will have it live. It's a pretty important metric. So all of the business networks will be covering it. Okay. Forexfactory.com. Any website will have it on there. Okay. So what they're expecting year over year, the PCE price index is forecast to rise about 2.5%. Okay. The core PCE year over year is forecast to rise 2.6%. So again, we'll be keeping our eye on this. That's for sure. It will have a little bit of a it'll kind of set the tone for trading for tomorrow going forward. Okay, but always keep in mind that the stock market in general is a very forward-thinking tool. Okay, so just because if the number is super hot, may result in, and it's always volatility to the downside. We tend to head for the exits quicker than normal when we get bad information. So we'll kind of keep our eye on it going as the numbers come out. That's for sure. Yes, Ken, 7:30 Central Time, 8:30 on the East Coast. So it's an hour before the market opens. Okay, an hour before the market opens tomorrow. So it will, because of that, it will set a little bit of a tone for the day's trade. Yes, it is set to, like I mentioned, it's 0.3, a little bit higher than expected. That's for sure. Yes. And it can move the markets. Absolutely. Absolutely. It can definitely move the markets. So we will, we were kind of a little bit active today, not so much in our two rooms. We had a couple signals out there. One got filled, one did not. We've got our eye on some expiring positions for tomorrow, which we're going to get into here in a moment. But first I want to make sure that everybody's kind of content and at ease with this PCE. Yeah, and yes, this does have the Fed follows this pretty closely. This is a pretty important number to the Fed, that's for sure, because it's centered around inflation. And obviously interest rates and all that kind of good stuff is always focused and driven by or the lack of inflation. So we'll see what it looks like going forward. So again, we'll have to, just wait till the numbers come out, Andrew. One thing that we know it's not going to show is food and energy. And as far as I'm concerned, those are pretty important components that are left out of this thing. And Zora, I think you're stuck with me until the end. I hope you're okay with that. And I know you are, of course. And Mo will be back here once I finish up with the expiring positions for tomorrow, which are not that extreme because we made some adjustments yesterday and today. Mo will be back with us. Excluding food and energy is the headline number. That is correct. So take it for what it's worth, But again, like I mentioned, as far as I'm concerned, food and energy, those are my two biggest bills every month. That's where all my money goes. I mean, I got to food and energy. Well, as Mo will tell you, I just have protein shakes and protein bars, and Thor just eats dog food, and my wife is a super good cook. But we tend to spend most of our income on food and energy. We will find out tomorrow what the number is. If I knew what that number was right now, I probably wouldn't be here. Correct. It's mainly just like a forecast or a kind of a survey of how the economy looks without food and energy. So if you don't eat and you don't use any lights, it's probably okay for you. Yeah, exactly. If I had that information, like Kevin says, I'd either be in prison or I'd be in Tahiti walking around barefoot on the beach with my wife and dog. And right there, I knew Patrick had to be somewhere close by. Yeah, Patrick and I go way back, and we have our rice cake discussion. That's for sure. Yeah, rice cakes. Well, you see the price of rice lately, Patrick? It is not cheap. All right, Kim. Nice seeing you too. We'll catch up with you tomorrow. That's for sure. Okay, so here's that's the impact that may have on the markets. Obviously, a super hot number, probably not that good for the marketplace. Okay, something in line. Like I said, usually, we react. The knee-jerk reaction is a little bit more extreme when the news isn't so good. So that's how I would kind of interpret the number going into into the report tomorrow. Gas, not so much around here. It's kind of staying in that $3.70 to $4 a gallon, range where I'm at. So let's move on here to the expiring positions for Friday tomorrow, which is tomorrow, of course. And right now, hopefully everybody should see Chewy on the screen. CHWI, Chewy. Is that accurate? Oh, beautiful, man! I'm starting to like this new setup we got going on here for the after hours. Okay, so as most of you are probably familiar with, my after hours group that I hosted at least after hours during this exact time slot. Thursdays were always dedicated to our expiring positions for the following day, which is Friday. Options expire every Friday. Okay, so more times than not, we've got option positions expiring on that Friday, and it tends to be a little bit uncertain as to what we need to do, but more importantly, what we don't need to do with some of our positions. So what we do to address this is we kind of go through anything that has an option or a position that's expiring on the expiration. Well, tomorrow being March 28th, we will be addressing any options that expire tomorrow. Our first one that I got right here, and like I mentioned earlier, there's only a few of them because we made some adjustments today. And this is for the options volatility room that you see on the screen right now. Chewy is a spread I put out in the options volatility. Unfortunately, apparently, everybody stopped feeding their dogs because Chewy had earnings on Wednesday, which was yesterday before the opening. Stock was up pre-market, and the spread was looking kind of like a success. And then all of a sudden, once the markets opened, it sold off. Their earnings report was fairly in line. Their guidance going forward, which I want to stress, is more important than actually what the numbers look like. It's always what the forecast looks like. The sky's never been bluer, or no one's feeding their animals anymore. Okay. And much like with the Fed, it's not so much when they're announcing the interest rates, what they're doing for the current statement. It's always what they say going forward, what their forecast looks like. Much like earnings for corporations, kind of follows the same template, if you will. And from what I was able to break down in Chewy's report, it didn't look so bad. But again, stock's kind of in the same. We put this spread on when the stock was about 34 or so, a little lower, 33.95, whatever it was. As you can see right here, for those that are unfamiliar with this screen, here's Chewy's close today, 32.69. I got the cursor right there. After hours, it's kind of still trading down a little bit, 32.50. So the spread we have on, as you can see, is a diagonal spread. For those that were in the coaches roundtable on Tuesday, this past Tuesday, I spoke about the diagonal in this particular diagonal in general. Okay, so maybe not something that we're not familiar with, but again, the spread came out in the options volatility room. Okay, it expires tomorrow. And what we've got here is a March 28th 37 strike that we're short, expiring tomorrow. Now, you can see this, it's out of the money, obviously. The option is out of the money. So don't be fooled, though, because we need the stock to be closer to 37 than where it is right now for it to be in a very favorable position. Because at this juncture, with the stock down here at 32 and change, our only probable course of action is going to be to let this 37 strike expire. And then going forward on Monday, we will be long just the one April 11th 35 strike. Okay, now we put the spread on for about right around $1.05 on Tuesday. And as you can see right now, it got marked out at about 40 cents at the end of the close today. Now, is an exit an option and just kind of take the loss and move on? Absolutely. Maybe something we will reevaluate in the morning tomorrow after the number comes out. Because if one thing that the PCE does include is animal food. So that's in the forecast. I go, oh, food and energy. It may not even be in there. So we will see how Chewy responds after the PCE number tomorrow. And maybe we just exit the position to salvage a couple pennies here and move on. But our other option is to let the 130 is to let the one strike expire tomorrow, and we will just move forward with the 35 call into April. Okay. Any question? Yeah, Thor made you. Yeah, you got it, Robert. Thor was coercing me for that trade. That's right. Absolutely. Yes, Bear. I've still been looking. And for those of you that are curious what EM stands for in Barry's chat right there, EM stands for the expected move. Okay, now, are we all familiar with the expected move calculation, or should I review? Because reviewing is my specialty. So I could definitely go over the calculation for those that are unfamiliar with it. I will do, Kevin. Absolutely. Please review. Glad I asked. And I do ask a lot of questions in general. That's another one of my specialties. Okay. So the expected move. Okay. The expected move is a metric that Scott and I use regularly in both of our rooms. Okay. Typically, any spread that we put out in the options vol room or an options essentials room, or any spread Mike Short puts out in the short-term options room, we always have a target strike. Okay, there's always going to be something we got to have as the foundation for our signal, where to start structuring our signal, kind of like the scaffolding around the building. Okay, Who can tell me where that is? Where do we always want the stock to move when we put out a signal? Where is our sweet spot? And Barry, we could consider a calendar or something if the stock is higher, okay? But where it is right now, probably not an option. Loretta, you got it. Barry, you got it. To the short strike. Robert, you got it. We always want the stock to move to the short strike. That is a 100% common metric for any signal that you see, for any spread signal that comes out of any prosper trading coach. Okay, we always want the stock to move to the short strike. Now, solid question going forward is, how do you determine what the short strike should be? Well, there's a couple different measures that we use. Okay, in this case, we use the expected move as our short strike target. Now, there's also the 50-day moving average, which is the red line. Okay, sometimes that'll produce a line in the sand as either a resistance or support. Okay, or the blue line here, which is the 200-day moving average. There you go. There you go, Robert. Exactly. Short strikes, obligations, chicken have nuggets. Kind of some inside chatter from my group. That's all. Okay. So when we were constructing this particular trade, yes, and earnings do throw a little bit of a canary into the coal mine. That's for sure. But that's why I chose the diagonal, because one thing that we always can count on when we're putting a signal together for earnings is what? What is one thing that we can definitely always know is going to be present that is not usually the case? Boom. Volatility. There you go. Volatility. And volatility always comes in after the announcement. Doesn't matter what they say. In this case, every dog has its bone, and the sky's never been bluer for Chewy, or they're not getting milk bones anymore, and no more dog beds, and it's all over. Whatever that report indicates, volatility is always going to come in on any stock that has earnings when the earnings announcement is out. It's kind of like the air is out of the balloon, volatility comes in, life goes on. So what we do, and I went over this on Tuesday a little bit. What we do to capture that volatility is sell the shorter dated option, the one closest to the earnings call. In this case, it's tomorrow's option, March 28th, because earnings were yesterday before the close. So the volatility is inflated. So what that allows us to do is sell a higher vol, which in turn gives us a higher credit. We collect more premium from the increased volatility. Okay. So an option that's typically, let's call it 40 cents, maybe 50, 55 cents because of the volatility. And again, volatility is just a fancy word for uncertainty. Okay. That's all it is. Volatility equals uncertainty. And when earnings are going to be announced, there's a little bit more uncertainty within the performance of the stock, because you never know what they're going to say. So uncertainty increases, kind of widens markets, brings the price up. Once the announcement's made, whatever it may or may not be, that always reverts back to the mean. Volatility always will revert back to the mean. The question is when, but it always does. So that was why, and diagonal spreads typically are a very popular strategy for earnings. There's others, but when you have a directional bias, we tend to take the diagonal because that gives us a little bit more delta one way or the other. Now, so we can move forward. The expected move, not as complicated as it sounds. Okay. How we calculate the expected move is this. We look where the stock is currently trading. In this case, $32.70. Okay. So what we do then is we locate the closest strike to where the stock is currently trading for the expiration we are targeting. In this case, we are targeting the 28th of March. So we then locate the strike that is closest to where the stock is trading. Keep in mind, when we put this signal out, the stock was a little bit higher. We used the 34 strike because that's about where the stock was trading on Tuesday. But to illustrate the calculation right now, let's just use it currently. The stock's trading $32.70. So we would choose the 32.5 strike. Okay, I've got the cursor right there. So we locate the strike for the expiration we are targeting. We then take the theoretical value of the call. It's basically the at the money straddle, the combined at the money straddle for the target strike. There you go, Robert. So the straddle is the purchase of a call and the purchase of the put that is the same strike price. Okay, so in this case, like I mentioned, we're looking at the 32.5 strike. We got a call value of about 39 cents. Let's not split hairs. Let's keep it at 40 cents to keep the math a little bit in line. We've got a put value of 26 cents. Okay, so that gives us an expected move. Oh, I don't know, roughly about 70 cents or so, 40 and 26. Let's call it 76 cents between today and tomorrow. So, and that's a plus or minus figure. Okay, so we would then add that expected move to the current value of the stock, and that would be our expected move plus or minus. Okay, now when we calculated this expected move on Tuesday, we used the 34 strike, and it was roughly $2.75, which brought us up to about 36.75. And yes, Carlos, the expected move is generally a one standard deviation in the price of the stock. Okay. And even more importantly, it's accurate about 67% of the time. Okay. So as we're speaking right now, it's kind of within that range almost because but to the downside. Keep in mind, it's a $2.75 move plus or minus. Okay. So we're trending lower, which is not what we were looking for. But in terms of the integrity of the expected move calculation, it may be spot on. We don't know yet because we haven't gotten to expiration. We'll find out tomorrow. But the calculation is a plus or minus. So when we were putting this signal together, we were at $34 and we had about $2.75 expected move, brought us up to the short strike to the upside of about 37. Okay. Now, it looked a little attractive at that point in time for a couple of reasons. Number one, as you can see, I've got the bar right here, right at the top of that candle. Okay. Right about $36. And also, our 50-day moving average is right at 37, which would be a very, a sign of resistance up until that price. And as you can see, it's kind of done that over time here. It's traded up to the 50-day, kind of sold back off. And that's kind of been the trend. So again, we still have a day left of trade, but you never know. But that's how we went about structuring the signal. That's how you calculate expected move. It's going to be the at the money straddle plus or minus. Is that clear to everybody?
It's always fascinating, Jeff, how accurate the expected move sometimes is. Like to the T.
Yeah, it seems like it wouldn't be, but 67% of the time, that thing's pretty much right in line, but it's plus or minus. So that's the canary in the coal mine. The plus or minus. The calculation's easy. You're just adding two numbers together. And then you got a 50% chance of up or down. So that if you don't see the beautiful thing about spreads is if you don't have a bias, we were bullish. Okay, so we chose the diagonal. But for those of you that are in the room with me during the day, what is a spread option that we would use if we had no directional bias? We were just looking for movement. Yes, Carl, that's right now, Carlos. That's what it looks like right now. But let's just say, hey, we had we really didn't have a bias one way or the other, whether Chewy was to go up or down. We just wanted to take an earnings stab at it, so to speak. What kind of spread will we put out? Well, let's look down and there you go, Gene. And Gene's my guy. Gene's been following me for a few years. We'll use a double diagonal or a double calendar, a strangle swap. What that offers us is just direction one way or the other, like we're going to get into right now with Lulu. Okay, let me punch up Lulu. And for those of you that are Honeymooners fans, Lulu was the best dog I ever had. So here's Lulu on the screen right now. Lulu's got earnings, as you can see. We'll always put double calendars on right around the earnings announcement. And they have earnings today. It's going on right now after the market. And as you can see, the stock's down $22. Okay, so let's check this out. We always want movement towards the short strikes. Okay. So Lulu closed at 341.53. And if you, for some reason, you got to squint to look and see where it's trading after hours. So right now, after hours, and here's their earnings information right here where I got the cursor. Earnings 3/27/2025. That's today, AMC after market close. So while we were all chatting about the PCE, Lulu was announcing their earnings. They're probably in the earnings call right now. Don't know what they're saying, but stock's down. Okay. Now we have this double calendar on right now where we are short the 290 put and we're short the 400 call. Okay. So obviously stock's trading down to 315. We needed direction towards one of the short strikes. Okay. So in terms of expiration for tomorrow, obviously the calls are not going to be the calls are not being contested right now at the 400 level. It's the puts, the 290 put spread that we have on. Okay. And all a double calendar is two spreads. It's a short call spread. It's a short put spread, as you can see. Okay. We got two spreads there that we got to worry about. We got to worry about the 290 put that's expiring tomorrow, and it's matched up with the April 4th 290 put. The calls are worthless up at 400. So for tomorrow's expiration, we will be focusing on the put side. More than likely, we'll see an exit signal, puts only. We're going to leave the calls alone, depending on where the stock looks in the morning. But as we're speaking right now, that's what we're looking at. Calls are uncontested. Put side is what we got to focus on. We don't know, Mark, we always want movement towards the short strike. So as we're speaking right now, this position is favorable for us. Double calendar spreads do not work if the stock doesn't move. Okay? They do not work if the stock doesn't move. We need direction one way or the other. And right now, that's what we have. We've got direction to the downside, and you're more than welcome. My pleasure. It's why I have this Thursday afternoon discussion to go over things to expect for expiration tomorrow, because to the naked eye, if we don't go over this, you may wake up in the morning and see, oh no, Lulu's down $30 and I got a position on what the hell am I going to do now? Well, we know what we're going to do right now. We're going to address the puts. We're going to do nothing with the calls as we speak right now. Kind of alleviates a little bit of the anxiety of expiration. Okay. So that's what we got to do. That's what we got to worry about with Lulu. I wouldn't call it worrying. It's a favorable position right now. We'll see you later, Zora. Have a good night. Thanks for joining. Good to see you again. The triple Qs, which is next on our list of positions. Nothing to do in the triple Qs. We've made some adjustments during the week. We've got the March 31st put spread that we'll address on Monday, of course. But in terms of tomorrow's expiration, nothing to do. Okay. UNH is the last of our expiring positions for tomorrow. UH is right here on the screen right now. I just punched it up. Y'all should see it. And in this particular position, what kind of position do we have right here? And by what kind am I talking? Butterfly, vertical, calendar, iron condor? What are we working with right here? Excellent, Tom, Robert. we have an iron condor. The only reason why I asked about it was because some folks brought that up a few moments ago about a possible earnings type of strategy. And this is not one of them. Okay. Iron condors are not a go-to for earnings. And why would that be? What is the one metric that we look for with an iron condor? What would be our basis for structuring an iron condor, or our methodology behind putting one of these out? No, Roger, I've got UNH up right now. There you go. Loretta, Dave. We like a high volatility environment because it raises pricing, of course, but we're looking for sideways trade, range bound trade. All those answers are acceptable. Little movement. I would classify it like this: trade in between the short strikes. Okay, in this case, there's two of them. We're short to 482.50 put, and we're short to 512.5 call. Okay, iron condor is two short spreads. Again, we're short a put spread, we're short a call spread, as you can see right there. It's on the screen right here. Okay, so obviously stock's 515.72, so the 477.5, 482.5 put spread, not an issue. Out of the money, expires worthless. Okay. All right, you got it, Jeffrey. You're more than welcome. My pleasure. Okay, so in the case of UNH, with the stock right here at 515.72, we've got a little bit of uncertainty, a little bit of work to do here. For those of you that are interested and have the position, you probably know that we sold this for $3. Okay, we put this spread out, we collected $3. Maximum it could be worth is $5. Okay, we have a bid out there right now. We've had it out there for a $2 debit to buy it back. Okay, stock's got to be a little bit lower for that to trade $2. Right now, as you can see, it went out about $3.17. Okay, so we got to massage this thing overnight. We're collecting theta. We got to massage this thing overnight, see where the stock is in the morning. We've got that bid out there at $2. We may have to increase that bid to take off the risk, because we do have, with the stock at 515.72, what type of exercise and assignment risk do we have? Are we in danger of being assigned? We sure are. Buyers have rights, sellers have obligations. So us, as the seller of the 512.50 strike, we have the obligation to deliver the stock at 512.50, and it's trading 515.72. Not something we want to do. Not something we want to do. Now, yes, we've got the upside call, so our risk is defined. It definitely is defined, but we'd rather see the stock below 512.50 or somewhere where we can get out of this position for a gain. So we do have some risk. We do have some risk coming out with this position, but we've got, the good news is we've got defined risk. That's for sure. So again, this is going to be something we got to keep our eye on for tomorrow in terms of expiration. Well, it could definitely help tomorrow. Definitely could help tomorrow, because we may get some downward movement. I would not co-sign a sell or a buy right now. I would just kind of just sit tight. I know that's not the solid answer, but there we go. That's it. I want to get the market. I want to get the controls back to Mo.
Jeff, that was awesome. I want to thank you so much for sharing all of that information. I hope that that was super helpful to some and to all who are a part of, especially some of our programs. So before we wrap up, guys, I just want to say thank you all for being here. Just a quick reminder, everything that Jeff's gone over is just the tip of the iceberg. The real power is really what happens inside of our trading rooms every single market trading day. Our coaches aren't just giving you guys theory. They are giving you practical application behind it, giving you real setups, actionable strategies, open to close, market open to market close. We do these sessions because we truly believe having access to real-time market insights and professional trade analysis does make a difference. And you can just ask some of the students. I mean, I see several familiar names in the chat right now. I love that. The markets move fast, let's be real. And being able to see and hear, us, our traders, our professional experts, our instructors break trade setups down live, go over trade rationale live. I mean, it truly is a game changer. That's what helps traders stay ahead. So for those who aren't in our rooms every day, this is a way where you get a little taste, you get a little snippet of the kind of analysis, expert insight, the decision making, the thought, the strategy that goes behind the trade, right? That happens inside our trading rooms. So with everything we've covered today, I'm hoping that you all learned a little something new. You all learned something valuable. Jeff did a fantastic job there doing some review of some of our expiring positions as well. And I hope you feel more confident in your trading here tomorrow. So for those who are already a member of a Prosper room, you know the deal. This is the time where you can hop off, okay, review your trades, reflect on what Jeff's kind of gone over, and finalize your game plan here for tomorrow, okay? We know preparation is key, and if you are a member in one of our rooms, or all of them, or some of them, and you already have access, right? We look forward to seeing you bright and early, and we'll see you tomorrow. For everyone else, stick around. Although I will say we do have a Q&A at the very end. We'll continue to field some questions. But for everyone else, stick around, whether it's stocks, options, AI and momentum, short-term day trades, futures trading with automated software, or you're looking for trading capital where you can trade up to $100,000 of our firm's capital with virtually zero risk to you, there's a room here tailored to your goals. Now meet our team, guys. Any Marvel fans in the chat? Let me know in the chat. Are there any Marvel fans? Oops, lost my camera there. Any Marvel fans? Okay. Well, I call our team here the Avengers, okay? They are the all-star team. You will be hard-pressed to find, Andrew does, you will be hard-pressed to find another team of professional traders in the industry that can hold a candle to this lineup. I'm serious, okay? Each and every one of our professionals from the top down, Scott Bauer, Mike Shore, Charlie Moon, Mike Patton, Dan O'Brien, Jeff Lake, who you just saw, is a subject matter expert, each and every one of them. A combined century plus, guys, 100 plus years of combined trading experience with our team, okay? Now, we've packed a ton of value in our rooms and all the other resources that we provide to ensure that our students can be successful when you enroll in our community. Now, we offer trading styles that align with almost every lifestyle. No matter what your schedule is day to day, we have a trading approach that fits you, okay? We have options essentials and options volatility, which is a spread-based swing trading approach led by Scott Bauer, right? That means you're in and out of some positions on average 2 to 10 days. That's what swing trading means. We have short-term day trades, which focuses on fast-paced intraday scalping of playing the market direction up or down. We play both sides. That way you can stay nimble in these types of market climates that we see today. AI and momentum trading with Charlie Moon. He focuses on momentum stock trading, and then AI, artificial intelligence, supercharged options trades. We have funder trading capital, where we can give you the chance to trade $100,000 of our firm's capital with no risk to your own, which is super cool. And last but not least, futures trading with Dan O'Brien, DOB, where our students leverage an algorithmic trading program with automated tools for precision and maximum profit potential. Now, I get we covered a ton today, guys, so I'd like to offer you a gift. We went over some expiring positions tomorrow. We went over the impact of PCE and the report coming out tomorrow morning. But the real question is, folks, how do you take this and you actually apply it to your trading tomorrow? Here's your next move. You see it on the screen, guys. If you want to get inside the rooms, if you want to stop guessing and start executing with confidence, and if you want to see how real traders prepare, plan, and profit each day, then now's your time to book a free complimentary one-on-one VIP strategy call